So this is chapter 1 for hospitality accounting, hotel and restaurant accounting, and we're going to be discussing why accounting is important because it is an essential management resource. Royal, why do we need to study accounting? Please read the slide.
Knowledge of the theory and practice of accounting is a tool with which to achieve success in the hospitality industry. Successful careers often depend on an ability to make daily operating.
I think you muted yourself. Anyway, so accounting is not just for hospitality. It's for all kinds of business. And even in our own personal lives, we can also apply accounting and accounting principles. So for example, can I afford to buy a new car? Or is it better if I buy a second-hand car? Can I afford to travel? Will I have enough money for my tuition next semester? So these are some accounting questions that you can also apply in your own personal life. But generally, accounting is used in all types of business. So in our case, we are in the hospitality industry. So we're going to be discussing how accounting applies in our industry. Now, Royal, what is the purpose of accounting?
The purpose of accounting is to provide accurate, useful, and timely financial information. It involves recording business transactions, analyzing business records, and producing reliable information.
Right. So we are bombarded with all kinds of information. However, some of the information, it's hard to interpret, especially non-quantifiable information. So sometimes we are provided with information without concrete data. So in accounting, we rely a lot on numericals or data processing. So with accounting, we need to interpret if that data will help us make good financial or management decisions. So what are these financial records or financial data? So these are financial statements and other business transactions that we can use in the operation of our business. So this is for the US. It's called USALI. So it is a book that spells the guideline for the hospitality industry and how we do our financial statement. So we are connected, we are partners with American Hotel and Lodging Association. In fact, all the slides that we are using is sourced from them. So here we use computerization or automation. So we use technology in order to improve our data analysis. So, but this is more for the hotel and restaurant industry, not really for the gaming or casino industry. So now we'll talk about financial statements and why they are important. Royal, please read.
Managers need timely, accurate information for their businesses to be successful. Investors need to analyze the quality of a potential investment or current stock holding. Banks need to decide whether to loan money. Creditors need to identify risk involvement in doing business with customers on an open line of credit.
Right. So for certain decision, we need to get reliable, accurate, and current information so that we are guided. We don't open ourselves to big risks. So for example, if we are extending a line of credit to a business, so we need to know if they are able to pay the loan, if they are a viable business, because we cannot just extend the loan to anyone. We need to identify and make sure that this is a win-win relationship between our organization and their business. So loaning money, it's connected to, let's say, extending credit to business clients, or sometimes tour operators and wholesalers. So what they do sometimes is they make a down payment and then they promise to pay for a certain amount at a certain time. So we can get information from different financial statements that we have and make a decision whether it's risky or not risky. So even in stock market, so if we have investments, we have to rely on financial statements to make sure if it's time for us to buy new stocks or to sell our stocks. So next is accounting management. So here we have different levels of staffing in our accounting department. So as mentioned previously, it is headed by our CFO, or the Chief Financial Officer. So in big businesses, the CEO is different from the CFO. So in some businesses, they are on the same level. Sometimes the CFO will report to the CEO. So the CEO is the Chief Executive Officer. And for the accounting and financial department, this is headed by the Chief of Finance, so the Chief Financial Officer. And next to that, you can hire a vice president if it's a huge corporation. And then you have treasurers, controllers, accountants, supervisors, and accounting staff or bookkeepers. Now, because of automation, we don't really need to hire a lot of staff for our accounting, because most of the record keeping is done online. We put it in the cloud, so we don't have a lot of paper files anymore. But it's streamlined. It makes our operations more efficient and streamlined because we are connected to the other departments in the hotel. So what are the tasks and responsibilities of the different divisions? So first, financial accounting. Royal, what's the difference between financial and managerial accounting? Go ahead, Royal. Can you read?
Financial accounting is concerned primarily with recording and accumulating accounting information to be used in the preparation of financial statements for external users. Managerial accounting is concerned primarily with recording and accumulating information so that financial statements and reports can be prepared for internal users.
Right. So with financial accounting, this is used by external users, meaning people who are not within the organization. So this can be the government, this can be other financial institutions who are extending credit to your organization. So these are official statements like tax returns, balance sheet, and other financial statements that we send to external users. Now, managerial accounting, the name implies that it is used by managers for the management and administration of our businesses. So here, it is used by internal managers or people who need to make financial decisions. So recording is really prepared for the decision makers. So who are the decision makers? This can be your restaurant managers, beverage managers, your executive chef, or even your chief financial officer. So there are different ways of recording business transactions. So you have a double entry system, meaning what you have debited must also total your credit. So that makes it balanced, right? So for example, accounts payable is partnered with accounts receivable. So how does this work? Let's say you run a restaurant and then you buy, let's say, 10 kilos of rice. So here you are going to open an account and then you are going to classify this purchase as an accounts payable. So you're going to place an order to the supplier and you're going to be paying your supplier for the 10 kilos of rice. So that's an accounts payable. Now, at the same time, in the restaurant, when a guest purchases dishes and beverages in our restaurant, then you are going to open an account, and this purchase is classified as an accounts receivable because they're going to pay for the food and the services that they have purchased. So this is our accounting equation. So remember last Tuesday, we talked about assets, liabilities, and equity. So this is the accounting equation. So this is applicable in any type of business. So this is a system of checks and balances. So how do we classify information? We have also discussed this last Tuesday. So just a brief review of what we have discussed. So what are examples of assets, Royal?
Examples of assets are cash, possessions, purchase rights.
What about liabilities?
Liabilities are debt.
Can you give me an example of a debt?
An example of a debt, like
Do you have any debts or loans? What are
no, professor.
Okay, an example would be credit card debts, right? So with credit card, you don't actually have the money to pay. Maybe you promise to pay at a future time. So a liability can be credit card debts. Now, what is equity?
Equity is the owner's financial interest in business.
Right. So where does our revenue come from?
Revenue.
Yes, where does our revenue come from? How do we earn income in our business?
We earn income in our business based on the profits that we make from the business.
Right. So profits will be based on the sales of our goods and services, right? What
Yes.
about examples of expenses? What are expenses?
Expenses are like you spending, like what like probably you're trying to upgrade your business or you're trying to do something from your business, and then you have to spend from your income or from the money you make from the business. You have to spend.
So expenses are used to run or operate our business. So how
Yes.
are we going to sell our goods and products if we don't have anything to sell? So we need to buy raw materials. We need to pay our staff. We need to pay our utility bills. So those are examples of our expenses. So there are two very common financial statements. What are these statements, Royal?
The two common financial statements are balance sheet, which shows the assets, the liabilities, and equity of the business. And then the second is the income statement, which shows the revenue and expenses and resulting profit or loss. Sometimes a corporation will have control over other corporations, and most include the result of its controlled companies in its financial statement. These are called consolidated financial statements.
Thank you, Royal. So a balance sheet, you have your general accounting formula, which is assets equals to liabilities plus equity. So that's your balance sheet. Your asset must be equal to your liabilities plus your equity. That's the name balance. So if you have 100,000 worth of assets, so your liabilities and equity would also be equal to 100,000. Now, an income statement, it's a T statement. So you have your sales, and then you have your profit or loss in case you are not making money. Now, there is a difference between an accounting income versus a taxable income. So I don't know if you have heard of GAAP. GAAP means generally accepted accounting principles. So these are accounting principles that is accepted worldwide. So it has some differences, but it would be according to your income tax law. So GAAPs do not try to influence business transaction. The main objective is to ensure that transaction results are presented in a business financial statement. So here you have to follow the tax code. So it is guided by economic, political, and social concerns. So this is generally going to appear in your taxable income and your business income tax return. Now, there are also private accountants that you can hire if you are running a small business. So you don't need to hire a chief financial officer if you're running a small family business. So private accountants have specialization. Some work in budgeting, some are specializing in cost accounting, some are specializing in taxes and internal auditing. Now, here in Canada, to become a certified public accountant, you need to take certification courses and you need to undergo examination. So even if you are a certified accountant in your home country, when you go to Canada, you need to have your credentials assessed, and then you need to undergo training so that you can become a certified accountant. So these organizations would help you in your professional growth. So you can always go to government website of Canada in order to get support. You can also check the CRA, so Canada Revenue Agency, for tax purposes, and there are also professional organizations can help you with your professional growth. So here are some government organizations, but this is based in the US. So here in Canada, the counterpart of the IRS is the CRA. So of course, everyone who's living in Canada, whether you're international student, permanent resident, or a citizen, you need to file your income taxes every year. So normally, we file our taxes April or May of each year. So there's no exemption. Even if you're new to Canada, you need to file for your taxes. If you do not know how to do your own taxes, you can just go to any government agency or settlement community, and they will help you with filing of your income taxes. So even if you don't have any income, you still need to file for taxes, because they can calculate maybe some of your refund for the tuition fee that you paid, and also you might qualify for some of the exemptions. So as mentioned, there are also professional organizations in this field. You can check government websites if you are interested in being certified as a professional accountant. Now let's talk about GAAP. Royal, can you read the slide, please?
Generally accepted accounting principles, GAAPs, are standards that govern the ways accountants carry out their responsibilities. Units of measurement, realizations, historical costs, matching, going concern, materiality, conservatism, consistency, objectivity, full disclosure, time period, fair value.
Okay, so these are accounting terms that we might not be too familiar with. So what I'll do is I'm going to send a reviewer, so it would have all the terminologies. So when you encounter certain accounting terminology, you would know the definition. So I'll post this in our website so that you can refer to it later on when you're doing your quizzes and assignments. So let me just do it quickly now so that I don't forget. So I'll add this to your documents. So I'll choose the file. So this would be a reviewer. It would contain all the accounting terminology that we are going to be discussing. It is arranged per chapter, right? So for example, chapter 1, you have the definition of accounting, you have the definition of accounts payable, accounts receivable, bookkeeping, etc. So there's also GAAP there. So I hope this will be helpful when you do your review. So let's go back and continue GAAP. So here are some of the definition of what you can encounter in generally accepted accounting principles. So you have unit of measurement. So you also have historical costs, going concerns, conservatism. So sometimes there are doubtful situations like during high inflation or high interest rate. So you need to calculate your risk. So that is also considered in accounting. So objectivity, of course, you need to make sure that you are looking at current, correct transaction and details of that transaction. Now, time period, it's different for each transaction. It can be accounts payable in 30 days. It can be the time of maturity for a loan or the changing of your interest rate. So you need to also be mindful of the time period for each of your transaction. So you have your different definition of accounting principles. I will not go into much detail. If you need more examples and clarification, we can discuss it in our succeeding sessions. So that ends our discussion for chapter 1. So now let's move on to chapter 2. So chapter 2 is all about starting a business. So when you move to a new country, you might want to start your own business. It can be a sole proprietorship, it can be a partnership, or it can even be a corporation or a limited corp company. Now, before we even start a business, we need to do our diligent research. So one of the things that we need to prepare is a feasibility study. Royal, what is a feasibility study?
A feasibility study is a preliminary study of a proposed project, such as a business startup, purchase, or expansion. The study uses the present time to predict the future and reach a positive or negative conclusion. The study typically consists of business description, competitive analysis, market research. equipment requirements, business location and evaluation, estimated income statement.
So for example, Royal, if I ask you, what type of businesses are you interested in maybe joining or even starting? Is it a food business, a clothing business, a service type of business? What type of businesses are you interested in?
A hairstyling business.
Oh, wonderful. That is a big demand here, especially in mainland, because especially for the minority, like your culture have very textured hair, right? So
Yes.
it's difficult to find a salon that would specialize on textured hair. So I have also friends who are African American or Black, and sometimes the services that they are used to back home, they find it very difficult to find it here in Canada. So some people, they just do their own hair, of course, because you're not a professional, you don't really know how to care for your own hair, right? And of course, even if you find that salon, it can be so expensive, it's too expensive. Like I normally have dark colored hair, but since here in Canada I want to try light colored hair, so I went to a salon. You know how much it cost me to color my hair? The first time I did it, it cost me $350. $350. So expensive. If I did it back home in the Philippines, it would only cost me like $50. So you see, there is like 800% more expensive than usual. So, I support you on that vision. I think you're going to be very successful if you open that business. But of course, you have to do your own research, because you don't want to start something that you don't have enough data on. So, what would be some of the information that would help you? So, what are the equipment that I need to buy? How do I get permits and licenses? What about location? Can I open a home salon? Can I do it in my home? What would be my price range? How much do I charge for, say, hair cutting or hair braiding or hair styling or even makeup, right? So these are information that you can get in your local small businesses bureau. So you can go to a government small business board and they can guide you. But of course, you need capital to start your business, right? And as international students, you might have some limited options. If you want to start your business, you have to maybe wait until you become a permanent resident to fully own your own business here in Canada. So maybe you can take a look at being partners with other people. So these are the different forms of business organization. So we've talked about proprietorship, partnership, corporation, and an LLC or a limited company. So what is a proprietorship, Royal?
Proprietorship. In a proprietorship, the business is not legally incorporated and is owned by a single self-employed individual. A significant advantage is that the unincorporated form of business is the easiest, quickest, and the least expensive form of business to legally establish. A significant disadvantage is that the owner has unlimited personal liability for any uninsured claims against the business.
Right. So, Royal, are you interested in opening your own business yourself, or you're looking at partners?
I'm interested in a sole proprietorship profession.
Oh, okay. So a sole proprietorship is great if you have enough capital, right? So you can control all the decision making if you open a sole proprietorship. Now, if you are lacking in some funds, or maybe you have the brain power, meaning you are an industrial partner. So an industrial partner would mean that you offer your services, your talents for the business, and another person would be financing the business. So this can also be a partnership. So you can talk about how you're going to share the profit, since one person is shouldering all the financial burden and the other will be contributing their services and talents in running the partnership. So let's say as a business owner. So as a business owner of a salon, maybe you have all the skills in styling, makeup, cutting. So you have the talent, but you don't have the capital. So you can ask maybe a friend or family to lend you, or they can even be your partner. So in this case, you can be a partnership. Now, if you want to grow your business, so you would need to open a corporation. So a corporation is a legally incorporated business owned by more than one person. So these are called shareholders or stockholders. So in your papers of incorporation, each person would have a percentage of ownership in the business. So let's say we are 5 owners of the business, and then we have 20% business ownership of the business. So that means we are all equally partners in the business. But some corporations, you might have more at stake. So it can be 30, 35. Some people will only have 2% ownership of the business. So these are billion-dollar and trillion-dollar businesses. So even if you only own 2%, it can still mean millions of dollars. So here, your assets are treated as owned by the corporation, not owned by a single person. So in corporations, you can issue stocks, especially if you are a publicly listed corporation, just like big tech companies like Apple or Tesla. So you can buy stocks. So stocks are offered to increase investment so that your business can grow. So stockholders, when you have profit in the business, so you can give dividends to your stockholders. So there are different types of stocks. Can you read the different types of stocks, Royal?
We have the capital stock. Capital stock is a term that represents all classes of stock. Common stock comes with voting privileges and has the potential for significant increases in value. Holders of preferred stock receive dividends before owners of common stock receive them, but do not have voting rights.
Right. So voting is when you choose the leaders or board of directors in the company. So if you own a common stock, then during voting proceedings, depending on how many stocks you have, so this is also directly proportional to your voting rights. So if you're going to change your board of directors or CEO, it needs to undergo your voting process. Now, if you want to have the privilege of having your own company and at the same time not having all your assets at risk, you can open a limited company. So not only in America where you can open a limited company, you can also do it here in Canada. It's called an LTD, or a limited company. So it's not a partnership, it's not a corporation, but it's also a legal entity. So what are the advantages? It doesn't, if your business goes into bankruptcy, they wouldn't chase after your own personal assets. So the term itself, it's limited liability. So the liability is only limited to the assets of the company. it will not get your own personal assets. So let's say I buy a car and a house, and it's under my name and my husband's name. So if I open a limited company, they cannot go after our assets. They can only go after the assets of the company. Separate asset will be for your own personal use. Now, two things that we cannot avoid in life, they say, it's death and taxes. So even if you don't want to die, even if you don't want to pay taxes, no one can escape, right? So two things that we can expect in life, taxation and death. Well, it's not going to come just yet, but taxes we have to do every year. So here in Canada, instead of the federal, we have the provincial government. So depending on your income, you have different tax brackets. And then if you have dependents, they also have different tax brackets for different types of businesses and ownership. Now, if you are a regular person, you need to set aside about 25% of your income. So 25 to 30% will go to paying for your taxes. So let's say, for example, in 1 year, you earn, let's say, $10,000. So out of the $10,000, 2,500 or 3,000 would go to the payment of your taxes. So your take-home pay or your net pay salary is going to be about $7,500 to $7,000. So taxes is used for the services that we get from the government. So roads, buildings, bridges, hospitals, schools. The government uses the taxes that we pay in order to give us the services that we need to live and work. Now, how do we tax for sole proprietorship? Royal, can you read the slide, please?
Taxing proprietorship income. Proprietorship does not directly pay income taxes. Instead, the owner pays the tax with his or a personal tax return. The self-employment tax is a social security and Medicare tax for owners of proprietorship, similar to the taxes withheld from the pay of wage earners.
Right. So I'll give an example. I am employed in a school, but I also have another work. I also teach English as a second language. So I am an independent contractor for another company, which means I am self-employed. So in my self-employment, they don't get taxes from my income. So what I have to do is I have to declare my income and I have to pay taxes for my income as an independent contractor. So it's not treated as a sole proprietorship, but it's because it's not my business, but it is a separate income from what I am earning. So I need to pay for taxes. So here I need to file for my personal tax return. Otherwise, if the government would find out that I have other income and I'm not paying taxes, I might have to pay for, let's say, a default, right? So for all the income that you are earning, you have to also pay for taxes. Now, for a partnership, it's different. Here in Canada, it also works differently. So if you're not an accountant, I suggest you hire somebody who is specializing in partnership taxation. If it's a new partnership, you can get help from the government. There are many volunteers that offer their services pro bono or for free, and they would give you advice on how to file for your partnership income taxes. Now, taxation for corporation would be totally different. So here you would need a team of professionals because you have a lot of income stream, you have a lot of expenses, assets, and liabilities. So here, especially if it's a publicly listed company, so all your transaction financial statements are open to the public. So it's open for scrutiny. And you must always follow government standards for taxation. Otherwise, they might come after you for tax evasion. Now, for a limited liability company, the reason why a lot of people are very interested in opening a limited company is because of taxation purposes. So everything that you are using for your business, so let's say you have a salon, right, Royal, and then you bought a company car. So the car is not owned by you, but it's owned by the company. So every time you use it, you can claim for a tax break or to declare it as an expenditure for running of your business. So of course, you can also use it for your own personal use, but since this vehicle is bought under the name of your company, so you can use it as to lessen your taxes. So I'm also considering opening a limited company. So offering my services. I want to open my own consultancy company. So I'll give you some updates on how it's going so that I can also give you some personal advice if you want to open your own business. Now, one of the popular ways of opening a business is a tried and tested franchise. What is a franchise, Royal?
A franchise is a marketing right granting the use of the name, trademark, and marketing of branded service or product. The franchisor grants this right to contract to the franchisee, the business operator, or the owner.
Right. So there are also franchise hair salon, right? But I guess the more popular franchises are restaurants. So you have Subways, Tim Hortons, McDonald's that are not company owned, but owned by a franchisor. So the franchisee is the main company that is allowing you to use their brand. They're allowing you to use their name. What are some franchise salon here? Let's see. In Canada. Okay. Salon franchise in Canada. Okay. So here, if you want to do your own research and you want to open your salon, instead of opening your name brand, your own name brand, you can go into the opportunity of franchising. So this one, Magic Cuts. So this was founded in 2009. So there's an initial investment of 100,000. And the royalty fee that you will pay for running the business is 10%. Jade Salon, it's more expensive. It's 250,000 to start, but the royalty fee is smaller. It's only 7%. So you have your Glamour Secrets. There are currently 39 salons, and the franchise investment is 450,000, and the royalty fee is 6%. And then you have Chapter Salon, which is, okay, this one is more popular. And the investment is not that expensive. It's 149,000 and it's 6% royalty fee. So you have Great Clips. And this is, oh, that one is Great Clips. Sorry. So this is Fantastic Sam Cotton Collar. So it was founded in 1974. The royalty fee is 0%. That's great. So you only need to pay them the investment fee, and you can use their logo to run your own business. And then you have wax bar, you have a barber shop. What else do you have? Suntan studio, so a tanning salon. Then you have Glamour Secret. So beauty franchises is worth buying, but there's a lot to consider. Pay attention to the reputation of the brand, training support, and make sure that the value will align with your own value and your investment. So, there are a lot of research that has to be done in order for you to help your decision in opening your own business. But you can consider owning a franchise in Canada. So let's talk about the advantages of owning a franchise. Royal, can you read, please?
Among franchising among reasons to buy a franchise are: 1, the business gets a name that is easily recognized. 2, the franchisor provides a proven business system. 3, the franchisor may provide support through newsletters, a toll-free number, a website, etc. Then 5, the business will perhaps enjoy a greater chance of success.
Right, because the brand is already well known. So there are a lot of advantages to opening a franchise. However, there are also disadvantages, right? So what are these disadvantages, Royal?
Franchising cons. The decision to franchise must also consider possible
Oops, you unmuted yourself there.
costs to continue franchise. 3, perhaps a loss of freedom in making decisions. 4, unsold.
Right. So the cost, instead of putting it all in the business, you have to pay for the use of the franchise. Of course, if you open your own business, you can name it after yourself, but you have to build your brand so that it can be recognized. So if you are buying a franchise, make sure that it is aligned with your own values and that that you have support in the operation of the business. So since you are buying a franchise, it's already established, you cannot really make a lot of changes, especially in pricing and product offering. So let's say the cut is priced at $49. So you cannot price it lower or higher because you have to follow standard pricing. Let's say you want to open like eyebrow threading or armpit waxing, but this is not part of your product offering. So you don't really have a lot of freedom in offering new businesses or new products because you have to follow the franchise agreement. Now, you can always cut your ties with a franchise. So there are many reasons why you can do that. Let's say you're not making any money, so you fail to pay the royalty fee. Now, let's say performance. So maybe you're not getting enough support for training. So they can also terminate your agreement, your contract. Let's say you violate some of the details of the contract. So you offered your own product without their knowledge, or you went with your own pricing. So that can be a violation of your contract. So in other words, there is a breach of contract. So it might result into the termination of your franchise agreement. Now, when you open a business in another country, So there are many business issues that we have to deal with. What are these issues, Royal?
The laws of each country regulate business practices, define business policies, and control business transactions. This makes it necessary to use the services of a qualified expert when doing business internationally.
Right. So let's use the hair salon business as an example. So in other countries, restriction on, let's say, hair straightening or hair curling, it might not be as stringent as here in Canada with the use of chemicals, right? Even in certification, I know in other countries, you don't need to go to a training school or you don't need to pass an exam to be certified. But here, if you want to be a certified hairstylist, you need to undergo training and certification. Otherwise, you cannot work as a hairstylist if you don't have the proper certification and training. So this is standardizing the industry, making it professional. So you cannot just get anyone from the street without necessarily undergoing educational and work experience to do their profession. So you have to follow, of course, the local policies and laws in order for you to continue with your businesses. So this is necessary in opening your own business. So you have to do a lot of research before you can open your own business, and also to ensure that it's going to be successful. So that ends our discussion for chapter 1 and 2.